Hello, assalamu alaikum friends. How are you all doing? This is the question section for the financial ratios, right? So in this we are going to do all the financial ratios questions. As you can see, test your understanding 1, financial ratio analysis. You have been given the statement of financial position. Let me scroll down. You have been given preference share in this case. And you have been given the income statement, profit or loss. And if you can see the dividend, you have been given both proposed and paid. Okay. And then you have been given the current quoted price and the price of ordinary share, 31st December 2005. What is this year? This is 2006, the previous year's ordinary share. And the requirement didn't ask you anything, but you have been given some. Use the information above, calculate the following ratios and comment on your findings. So first you have to calculate, then you have to comment on the findings. ROCE, EPS, PE ratio, ROE, DPS, dividend yield, TSR. 7 ratios you have to calculate. You have been given the prior year, or for some you have been given the industry averages also. That means you have to compare. We'll be solving this at the end. Okay, since it's easier and faster than we calculate the multiple choice questions. Now, before I present the answer, you yourself try this question on your own and see are you able to get the right answer, and then check with the answer which will be given to you. Okay, so what is the correct answer? In the year to 30th September 2014, an advertising agency declares an interim ordinary dividend of 7.4 cents per share. Okay, and a final ordinary dividend. So one is interim, one is final, of 8.6 per share. Okay, assuming an X dividend share price of 315 cents, what is the dividend yield? How do you calculate this? You have to know what is the formula for dividend yield. Do you know the formula for dividend yield? What is it? The formula for dividend yield is okay, let me write it. This is the reason why you have to know the formula at this stage. Can you see? So I will write the formula here. It is dividend paid and proposed dividend paid and proposed, both paid and proposed. And means you have to add both. Okay, the word and means you have to add both, divided by what? Total number of shares issued, total number of shares. Okay, so can we write the formula first? What is the formula? Interim ordinary dividend, that means this is proposed 7.4 and the dividend ordinary dividend 8.6. So you add both 7.4 C plus 8.6 C. What is it? The total is 16 C. Can you see that? The total is 16 C. That means 16 C divided by number of shares. What is the total number of shares? X dividend share price. Number of shares issued 315 C. Both are in C. So 16 divided by 315 multiplied by 100, which will be 5.08%. That means C is the right answer. So in this type of questions, you cannot assume or judge or guess. You have to do calculation working. You will not be given workings for the working. You will not be given the marks for the working, but you have to do because to get the right answer when calculations are there. Coming to number 3, test your understanding. Number 3, the price earnings ratio, PE ratio. Okay. What is the right answer? Measures how much profit a company generates for its ordinary shareholders with the money they have invested in the company. Is it? Is it? No. Is the basic measure of amount of profit attributable to each ordinary share? No. Expresses the amount the shareholders are prepared to pay for the shares as a multiple of current earnings. Looks right. Let's go and read. Now, another useful advice for the students. Please don't assume or jump to the conclusion when you. Sometimes the right answer might be A. So don't just blindly tick A because A looks very correct. Make it a habit that you have to read all the four options because sometimes there might be some other option which might be more appropriate. Okay, even though A looks appropriate in the beginning, because there's no harm. You might be thinking that there's a waste of time that you know that A is the right answer while reading. Still, read all the four options. So for now, we are locking the C, and D helps individual ordinary shareholders to see how much of the overall dividend payout they are entitled to. It talks about dividend, nothing to do with price earnings, so C is the right answer. Okay. Why? Understand. A, what does A measure? A is what? It is return on equity. Isn't it? Return on equity measures how much a profit a company generates for its ordinary shareholders. This could be return on capital employed also, but the reason why it's return on equity is because they have talked about ordinary shareholders. Please, when you're studying, this is for your learning purpose, not for your exam, okay? When you're studying, when something is wrong, don't just go. Don't just click the right answer and go to the next one. Understand why something is wrong. It will help you to understand and learn it better. Why this is wrong and what does it measure? Okay, so first one is return on equity. It could be return on capital employed also, but because of the word it says for its ordinary shareholder, that's what's return on equity. Okay, and next one is a measure of what? EPS. B is EPS. Is a basic measure of the amount of profit attributable to each ordinary shareholder. Each ordinary shareholder per share, earnings per share. Earnings is the amount of profit, no? And C is definitely PE ratio, which is the right answer, and D is what? Something to do with dividend, right? What is it? It's DPS. DPS, dividend per share. Because this helps individual ordinary shareholders to see how much of the overall dividend payout they are entitled to. Okay. Now let us go to the fourth one. Which of the following ratios is represented by the formula shown below? This is why you have to know the formula for each and every one, not just one. Can you see? This is how it will come in your multiple choice in your section A of your exam. So which of the following ratios is represented by the formula? The formula is given. Profit available for ordinary shareholder divided by dividend for the user, interim plus plus final. Right? The right answer is what? It is dividend cover. It is dividend cover. Now let us understand how is the wrong. Dividend yield. Okay. Dividend yield, what is the formula? Here can you see it? When we calculated your test understanding dividend yield, what is the formula? Dividend paid and proposed plus total number of shares. But here dividend interim plus final is in the denominator, so it cannot be dividend yield. Dividend per share. If it's dividend per share, that means dividend will be in the numerator, number of share will be in the denominator. So it's again wrong. Total shareholder return, it cannot be total shareholder return. Total shareholder return is capital growth plus dividend income growth. So this is also wrong. So the correct answer is what? Dividend cover. That's the right answer. Okay. Check your formula. How much from the profit you are being able to pay the dividend? Whether it's proposed, whether it's final. That's dividend cover. Number 5. Which of the following ratios is represented by the following formula shown below? Okay. profit after interest, after tax, and after preference dividend, divided by number of ordinary shares in issue. So it's clearly not return on capital employed. Why? Because return on capital employed, it is profit before interest tax, right? Before interest and tax. So this is not the answer, not the option. Wait a minute. This is not the option. No, oh my god, my pen is not working. This is not the option. B, earnings per share. Profit after tax. Yes. Preferential number of ordinary shares in issue. Yes. It is EPS. For now, let us go to the C1. Definitely not C1. And financial gearing, it cannot be financial gearing because there's no debt. I've told you when gearing is there, the word gearing itself means debt has to be there. There's nothing mentioned about debt in the numerator. It's profit after tax, so it cannot be financial gearing. EPS, why earnings? Because earnings goes to shareholders. So whatever, if it's for shareholders, numerator will always be profit after tax, interest, and preference dividend, and divided by number of shares. So earnings per share. Coming to 6. I think this is the last one, and then we'll go to the first one, which we have left. So company is following summarized statement of profit or loss. You have been given till net profit. What is the company's gross profit margin? It is just take your gross profit 28,000 divided by your sales revenue, which is 70,000. So how much it is? 28 divided by 70. It is 40%, right? So that's it. And the first one, this is the ratio. We have to calculate return on capital employed. We have to know the formula for all this. Okay. And if you see all these ratios, these are all of the ratio investor ratios except return on equity, but return on equity can always be also investor ratio and profitability ratio, and return on capital employed. It's a profitability ratio, but it can be used as investor ratio also. The rest, everything is investor ratio. From financial management's point of view, investor ratios are the most area which could be asked compared to the other three. Okay. So now, let us first start with the return on capital employed. So first, return on capital employed. What is the formula for return on capital employed? Profit before interest. Is not nothing to do with shareholder, ordinary shareholder. So profit before interest and tax divided by what? Capital employed. Return on capital employed. So what capital employed should say is capital employed. Multiply by 100. So what is the profit before interest and tax? That is your operating profit. You have to go and check the operating profit, which is what? 400. If you can see here, 400. Okay. So 400 divided by capital employed. Capital employed, what we learned? You have to go to the balance sheet. Your share capital plus reserves plus non-current liabilities. That means 2000 plus 600. Okay, here we are taking the preference share. Okay, here don't take it as debt. But anyway, even if you take it as debt also, you have to add that debt. Right? So it's added 2600. So it is 2600. Now you find in terms of percentage, it will be 15 point, take into one decimal place, 15.4%. So what happened? Here prior year it was 11%. If you see, here it's 15.4. So it's an improvement. Short-term improvement is there. That means the company is using efficiently. The funds are being used efficiently. Okay, that's what it means. Because you have to also comment on your findings. So this short-term measure is improved, suggesting what? The comment you can write on your own. Okay, I'm not going to write the comments. I'm just going to do the calculations and show you how to calculate. Improve. I'm just telling you the sentence so you can write. The short-term measure has improved, suggesting that the company is improving the efficient use of its fund. Now coming to the next one, B. EPS. Wherever I'm getting space, I'm doing. So what is the formula for EPS? Just now we have done one. Okay, so from there you can see profit available to ordinary shareholder. That means profit after tax divided by what? Number of ordinary shares. Okay, so what is the profit attributable to the ordinary shareholders? It is, if you see 160 minus 20, you have to take this 20 also out. When there's a dividend for preference, remember, we take it out, because after we take that out only, the balance is for the ordinary shareholder. So 160 minus 20. Okay, divide by number of shares. What is the number of shares? Go up and check. It is 1000 and $1 rate, so it's 1000 only. So the answer you will get, remember EPS is in cents, so it is 14C. If you will be getting 0.14, that is in dollar, you have to convert it into cents of 14 cents, 14C. And if you see the EPS, it has, prior year it was 13.5, this year it is 14 cents. Okay, now you have compared with this, but what about the 3.5%? The growth, you have to find the growth of EPS. Okay, so the growth of EPS is 14 minus what is the previous year, 13.5, divided by 13.5, so it is 3.7, which is again good. If you see this and this year it is 3.77% growth, before it was 3.5. so what does it mean? EPS is growing at a rate marginally above, not so much, marginal, just slightly above the industry average, which suggests an acceptable level of profitability is being achieved. Right? Acceptable profit is being achieved. Coming to the PE ratio. Right? What is the formula for PE ratio? Share price. Because price earnings, so this P stands for price, share price, and this E earns for earnings, earnings per share. So EPS. You have previously calculated EPS, and share price is how much? They have given you the share price 1.4. This 1.4 is in terms of dollar. When you convert it, it will be 140C. You have to take it in terms of cents because your EPS is in cents. So 140 divided by 14, both are in C. Okay, that means how much? PE, it is in terms of percentage of what? It is times, 10 times. 10 times. If you see here, it is how much? Industry average is 7. That means it's good. So what does it say? This is higher than industry average. Okay, so this may because the company is perceived to have good growth prospect. That means it is likely to be seen as having good investment potential. Okay. So the current growth in EPS is fairly low, but the company may be expected to make great improvements in the coming years. Now they are linking it with EPS because EPS is related to PE ratio. They are saying the growth is low, but they're expected to make great improvements in the coming year. Coming to ROE, return on equity. Okay. So ROE. What is the formula for ROE? PAT and preference dividend. Profit after tax. Because return on equity to equity holders is always after tax. Then shareholders fund. That means we are not taking long-term debt. Okay. So here profit after tax is 160, preference dividend was 20 minus shareholder fund. What is the shareholder fund? You have to go and check. It is only this 1000 plus this 800. You are not taking 200. Okay, because we are already taking ordinary share and reserves. So 1800. Return on equity for equity holders only. So it is 7.8%. And if you see here, it is 7%. That means it's good. It's good, right? So ROE is higher. So in addition to the rising EPS, if you see the earnings per share is increasing. So in addition to this, it appears that the company is reinvesting the funds it earns effectively. So it's as a whole, it is doing better than the industry. So if you see, this finding is in line with the high PE ratio, right? If your PE ratio is high, so return on equity also will be high. So it's in line with that. PE ratio is also high, return on equity is also high. That means there is a good growth opportunities are there. Okay, coming to DPS. What is the formula for DPS? Dividend per share. So dividend paid and proposed both per share. That means total number of shares issued. So the dividend paid and proposed is, we'll go and see, it is 125. Okay, number of share, total number of share issued is here 1000. So it is 125 divided by 1000. It will be in what cents? 12.5 cents. If you see here DPS, it is 12.5. So it's the same. That means what, they are maintaining a stable dividend per share. So it is unchanged. Even though EPS, earnings per share increased, that means your earnings increased, but based on that your dividend didn't increase. So this would make sense, definitely. Because we have previously told, when we were studying dividends per share, we have told that in order to maintain the dividend per share, even if earnings are high, that means during good times, you don't pay out dividend, you invest it, reinvest it. So that's why it makes sense, logical sense. Why? Because management are often reluctant to increase the dividend too quickly. In case poor trading conditions in future would then require dividend cut. Because when poor trading conditions occur, then you can cut the dividend out there. Because that time you have to cut the dividend out. So dividend cuts are not well liked by investors. Since the high PE, now do you see, they are not only talking about DPS, they are also talking about EPS, dividend per share, PE ratio. They are interlinking it with other ratios also. You have to talk about other ratios as well also along with DPS. So since the high PE ratio suggests good growth prospects, what does high PE ratio suggest? That there's a good growth prospect. Okay. So management may delay a dividend increase until this come to fruition. Until then, they can delay the dividend increase. Because growth prospects are there later. So coming to dividend yield. Okay. Dividend yield, they haven't given any information about dividend yield for you to compare. Okay. What is the formula for dividend yield? DY. It is DPS, dividend per share, divided by market price per share. Dividend per share, already we have given 12.5 cents divided by market price per share. Market price was 1.4. You have to take it in terms of cents, so it will be 140 cents. Remember, both your numerator and top has to be in cents. Same. So it will be 8.9%. But since they have not given, you still can calculate the prior year dividend yield. How? Prior year dividend yield. How are you going to calculate the prior year dividend yield? By the prior year DPS divided by prior year share price. So prior year DPS we have, right? Dividend per share for the prior year we have. What is it? 12.5. So 12.5 cents divided by prior year share price we have been given here. 1.22. So 1.22 means it will be 122 cents. Okay. So it will be 10.2%. Don't forget to convert this into cents, because what happens is, let's say for example 12.5 cents, you have keeping it in cents but you forgot to take the cents, you are taking it as $1.22. This is in dollar, remember. What happens, this percentage will become 102 point something something. So when you take it in terms of percentage, since this number is bigger, the numerator number becomes more than 100%, right? So it makes logical sense that it cannot be more than 100%. That means your denominator has to be high, the higher amount. So it's 122. Okay, 10.2%. So here it is 10.2, but here it's 8.9. This here it's 8.9. It's falling down. So dividend yield is falling means what? Dividend has not been increased while the share price has grown. Share price increased. Okay, how we are seeing it increase? Because here it is same. If you see the dividend, but share price was 122, now it's 140. It increased. Okay, so share price increased, but dividend didn't increase. This shows the weaknesses of dividend yield as a measure, right? Definitely shows a measure weakness, because your share price is increasing, dividend is not the same, but dividend yield is showing decline. So it's a weakness as a measure. Okay, so the shareholders are also benefiting from the increased share price, but dividend yield does not take account of it. See, shareholders, when share price increase, isn't the shareholders getting benefit out of it? They are. But dividend yield, it's not showing. The dividend yield as a measure, they are not showing that benefit to the shareholder. Because as a percentage, if you compare from the prior year to this year, it's declining from 10.2 to 8.9. So that's why this is not a good measure. Last but not the least, the TSR, total shareholder return. What is the formula? DPS, dividend per share plus change in share price. Divide by share price at the start of period. In case you forgot the formula, so keep the formula shared in front of you before you do the calculation, but it's not advisable to do so, because the main idea is for you to remember the formula and then apply and do these questions. Okay, so dividend per share 12.5 cents, right? Last change in share price. So the share price from the share price, don't take it in terms of negative. Okay, that means 122 minus 140, then the number becomes different. Okay, just take the higher minus the lower amount. Divide by share price, which is the old share price 122. Oh, wait a minute. Wait. Just a bit. No. You can take the difference. The latest has to be here. And then deduct the old. Latest minus newest minus oldest. Okay, I'm sorry. You can take. It could be negative, yes. Then the answer is 25%. Okay. If you see here, what is it? It's 20%, but this year is 25%. That means it's good. Industry average is also 19%. So now, what does it mean? The overall TSR is above the industry average. It's 25%, which is above 19%. Is good. And also, compared to prior year also it's increasing. So this can be explained by an increase in share price which supplements the dividend received. Share price we saw it's increasing, which supplement the dividend received. So even if your dividend, if you see is 12.5, it remains the same. Okay, your share price is increasing, so that's why there's an increase. And this increase is a sign of increased investor expectations of future income. That means investor has a great expectations of future income by looking at this sign. So overall, what can you tell when you have to give a conclusion finally? This appears to be an efficient growing company with, don't forget that overall you have to give one conclusion after you calculate all the ratios. Overall picture you have to give. Okay. So the overall, if you say everything increased, ROC, EPS, PE ratio, return on equity, DPS remains same, dividend yield declined. So only dividend yield declined. Rest all it increased. So what conclusion can you give? This appears to be an efficient growing company. Definitely it's a growing company. That's why they're increasing, right? With promising prospect recognized by shareholders. So managers are prudently delaying increasing dividend payments too early. So they are delaying that to avoid later drops because they know that they have to cut the dividend, so they are not increasing the dividend now. They're delaying that increase in dividend now, the manager. Okay, what happens because of that? This will dissatisfy the investor and therefore the share price will fall down. Okay, like maybe the share price is increasing now, but in future it will fall down. So ultimately it will affect in the long term. So that's it about all. So this were all the questions in that chapter 19, yes, 19 of your textbook. So you can practice all these questions, not just one, try it many times until you become perfect. Okay, so that's it. See you and take care.